Hello everyone, my name is Joe Scorsone, channel is called Ethernet Wing. In today's video, I'm going to be giving you guys a bit more information about my product with LuxAlgo, about the indicator I made with them. Show you guys on the real charts right here. This is a QQQs on the 5-minute. So the origin of this kind of video, this kind of idea, what I'm going to show you guys is a comment on one of, or the only other video that I did about my indicator was this video right here. The whole idea was that I didn't show a backtest. And I did that on purpose. I did that because you guys would have no idea if that backtest was faked or not, if it was overfit. You guys would have no idea. So this individual said Monte Carlo. And when I hear Monte Carlo, I don't think of estimation, kind of in that video I made about options pricing or like estimating pi with the unit circle and square, right? I think of how bad can bad be and how good can good be. And so that's pretty much what I want to show you guys today. We're going to go through, I have a handful of tickers, and we're going to explain how I'm going to show you guys all this information, right? So here's the first video. I'll link that in the description. This is the product, link in the description as well. Check out my business Twitter, check out my personal one. But yeah, let's hop in. Let's hop into some code because this is how I'm going to be explaining this to you guys. So if you guys remember, not that long ago, I made a parallel backtester in Go, and I just did a simple moving average script. Well, it's kind of becoming really useful because I didn't want to do it in Quant Connect. I don't know why, because I just didn't feel like, I don't know, it just didn't feel right. But doing it in this context, it just felt right. I don't know. I don't have a good reason. But regardless, right, I'm going to use this parallel backtest, and I coded the strategy in Go. And so what we're going to do, I'm going to explain this code and then explain like how we're going to explain everything, go from start to finish. I really think so. We're going to select our ticker. We're going to go over all of these at least. And I'm going to get CSVs for daily, hourly, and 5-minute. And so then with all those CSVs saved, we're going to come back into here. We're going to use this map of resolutions, right? It'll say for the daily resolution, we need to use this CSV and this risk, right? That's what's going to be the key differences for every backtest, because if you have ever looked at or used the indicator on TradingView, you know we have all these default values, right? That's going to stay fixed as a default for the backtests. The only thing that's going to change is the risk. And so for the daily backtest, what's going to happen is I don't know why I'm using 0.5% for daily. Whatever, we'll keep it that way. When we have 3% for a stop loss, it'll go through with 7% as a take value, take profit, 6% as a take profit, 5% as a take profit, right? So that way you guys can see different ranges. So there's 6 of each. We're going to get 36 backtests for each resolution, right? And so we're just going to go through, iterate through every resolution and every bit of parameters for it. And we're going to load up that CSV. That'll be our data. We're going to make the new strategies with each stop loss and take profit, right? Just iterate through. Run them in parallel so that way we're not here all day, right? Always buffer a channel when you can. And then we're going to get back account values, results, and a backtest ID. Backtest result, I'll show you guys that in a second. But one thing I do want to mention is that all these account values, all these backtests, is started with a $10,000 account, and each trade puts 20% of the account on it, even as it grows, right? So each trade is 20% of the account. I took the approach of like you're 80% invested in like real quality stuff, and you want to trade on the side, right? That's the approach I took. So yeah. Then for every strategy, we're gonna run it asynchronously, pretty much run it parallel, run it concurrently. It's not necessarily parallelism in Go, it's concurrency, but that's a topic for a different day. But we're gonna execute our strategy. Execute is an interface, right? We need data, which is OHLC, open, high, low, close. We need a model name, so that way we know what to give back. Then we get back these backtest results, and then a different map for it, yeah. So right? That's pretty much all that. We just give it the strategy and the ID. And yeah, that's what we need for that. Wait for everything, close our results, and we need to write a CSV, right? So we're going to take the same resolution that we had earlier. So it'll be daily backtest results, right? We're going to create a CSV, get some headers, and then write everything to the CSV, and then print out a success message, right? So after we get all of our data and we run all of our code, we're going to come over here to make some of these graphs. There's already one generated, so that's why I just freaked out. But we're going to go to our CSVs for whatever. We'll run all this. And then I'm asking so much of VS Code right now. There we go. And then we get a backtest, and we're going to get 3 of these. And my chair keeps on doing the thing where it slips down, so just bear with me for a second. There we go. I don't want to do any cuts that way, you guys. There's not even a chance that I change code, right? But yeah, whole point of this is that way you guys can see how bad could bad be, how good could good be. So the ranges for the results is, we'll call it 60% returns to, call it up 27% returns. Max underwater that we saw was like a minus 13%ish, right? And we're pretty much always holding a range of something like give or take 30%, right? Something like give or take 30% the whole entire range. You would see that this backtest up here, this is so slow. Backtest number 8 had the best results, so let's try to find that. Take profit of 5 and a stop loss of 3. I'll always say it risk return, so it's 3%, 5%. Right, so now let's go, and then let's look at the worst, and then one in the middle, so 34, 1 to 3, and in the middle, 26. 26 is 1 to 5. Okay. Same thing now for the hourly. Seems a bit more consistent. 23 ended up being the worst, 1 to 1. Something in the middle, 19, 1 to 5, and then the best one, 35, is 1 to 1. Oh, one of them is 1.5. Right? If we go back here on the hourly, yeah, one of them is 1.5. We won't know which one. But yeah, and then on a 5-minute, you can see that it's pretty much all over the place. We got something everywhere. One of the worst ones that would have gone negative, what would that risk be? Again, it's either a 0.5% or a 1/4%. Something in the middle, test 30. Once again, either a 0.5% or a 1/4%. One of the good ones, number 14, 1 to 1. Or either 1 to 1 or 1 to 1.5. So yeah, we're pretty much just going to do that like 7 times, or for however many tickers I have, right? So we're going to come back here, and we're going to set it to be QQQ. I'm pretty much going to go through, let me run everything. Pretty much going to go through the biggest indexes that people tend to trade, a stock that did nothing but go up, a stock that had a crazy 2021 and then sold off, a newer one, and then 2 commodity names. Right, so run all of that, run our code again. Everything's generated. New backtest. There it is. And so an overall theme is that we're going to have our range. We're here about 38%. We're going to have like our worst drawdown values, right? And then I'm pretty much just going to want to try to go through, pick one of the worst ones. So that's, oh my gosh, I can't even read that. We'll pick 28. So that way I think I could then go through, show you guys what risk tends to work the best and what risk tends to not work the best. So that was 28 down here, is 1 to 3, and then something like test number 5, 3 to 2 would actually tend to work a bit better. And so an overall theme that we're going to see, and then let's take a look at test number 2, if I can find it, 3 to 5. Pay attention to 3 to 5. I've recorded this video before. I accidentally showed one of my emails I didn't want to show. So because when I was on LuxAlgo's website, I went and I clicked on it, and I don't want to have that email online. But yeah, that's why that happened, as embarrassing as that is. but yeah, 3 to 5 comes up a lot. And so here we have again 1 to 3, and then number 28. We have 1 to 2, 1 in the middle, and see that number 24, 1 to 6, right? Then the 5 minute again, see this range 1 to 3, 35. It's probably a 0.5%, a quarter percent, one of those, right? So yeah, that's what we're gonna be doing for this whole entire video. Pretty much is we're gonna go through. IWM is the worst of the indexes, but still gonna. That's like the whole point is like still show you guys this kind of stuff, show you guys how good could the good be with all these. Take a sip of a poppy. Have you guys tried these? They're delicious. I'm not sponsored by anybody. If I tell you guys I like some of this because I like it. But yeah, we're back at it over here. So let's see, test number 3, you would have experienced that huge drawdown over there. 3 to 4. Something else really bad would be 1 to 4. Something really good would be number 21. Would be probably 1.5 and 4. Let it rock around a little bit more, right? Then you can see on a day hourly range again about 5-ish% on an hourly. Drawdown over here, the biggest drawdown is 33, something like 1 to 3. Really good one, 1 to 5, or not really good one, one of the not so good ones, 1 to 5, and then 29, 1 to 1. All right, 5 minute. Some of them stay pretty much negative to the end. So this one, number 35, would be where we at? 35, probably 0.5%, quarter, half, whatever. And then number 5 would be 0.5% take profit, like 3% gain, stop loss, right? Just taking them pretty much as soon as we get it. But that'll wrap up the indexes. So now let's go into something like NVIDIA, and Yahoo Finance handles the split, right? So it's 73 cents and $20, and then 117 recent. So that's good. Run all the code again, and then throw our graphs together. And we can see that these gains are just aggressive, right? We can see that we could have stuff underwater until about 2016, something like test 30. Take a look, 1 to 7. Something like test 28 just didn't really perform that well, 1 to 3. Something like test 6 really did well. Try to find it here, 3 to 7. Right, 3 to 5, 3 to 7, number 4, 3 to 3. Those tend to be the ones that do the best. On an hourly, we got test 33, 1 to 3. Test number 6 did really well. Then we'll move on. 3 to 6. Right, then we got a 5 minute. Did pretty dang nicely. 34, not so great though. So let's take a look over there. Probably a half or a quarter to 1. And then 15 did pretty dang good. So feel free to pause on any of this. So 1 to 1, something like that. And then test 9, we'll look at that because that one was pretty much at the top. 2 to 1. An overall arching theme, dang, that I found in this strategy, and just in trading in general, this is kind of a general thing to say, but something that will tend to work well and work in your favor is skewing your risk to return to make more than you lose. And it sounds stupid, but in the sense of if you make as much as you lose, you have to win 50% of your trades to make money. More than 50% of your trades to make money. If you make more than you lose, if you do something like a 1 to 2, you only need to win about 30% of your trades, 33, which is could put you in a huge advantage if you just size your risk right. Go 2 and 5 and make money. That's awesome. So let's look over here at Twilio, right? Because we can see that some of these risks would have held up better when everything else came down in the 2022 era. So backtest 29 seemed to do the best. 1 to 3. Oh wait, 1 to 2 I mean. And then 33 did pretty good. 1 to 4. One of these, is anyone negative? No, but number 7 is pretty much the worst. Number 7, 3 to, did I read it wrong? 15. I don't know where I got a 7 from. There we go, 15, 2 to 4. Tended to be the worst. Random one in the middle, 22, 1 to 3. Head down to an hourly. One of them that would still be underwater, 22, 1 to 2. We have test 5. That would have done really good. 3 to 1, in fact, very interesting. Get down to a 5-minute, pretty much great trends, 29. Probably a half to 1. And then test number 4, 1 to 3, right? Pretty cool. So now something that I want to talk about as I get Palantir loaded up is the whole meat and potatoes of the relay strategy. Why is this worth $40 a month? Why is this different than just a regular old neural network? Well, the explanation that I gave in the first video, I just can't remember if I ran it or not, is that it's similar to ChatGPT in the sense of how ChatGPT will learn the context of your conversation, right? Just to use Palantir as an example, I'm not going to make a prediction in October with January's data, right? But oftentimes what you'll see when people make these strategies is they'll just train for a whole block and then just make their predictions on another one. You lose so much context, you lose so much in there. And something that I overlooked when I was first coding it, because before I started recording, I looked over all the code, made sure it was correctly, and I was like, oh, I'm just simply not calling that function. Like I just forgot to. Because there's no return type or anything like that. And so I would call it, and then the 5 minute, the lower time frame trades really would not work until I made that change. Of course, I can't really show you that, and I don't want to take VS Code off my screen and get rid of it so that way I can show you, because the whole point is like one take. I can't change anything right now. You clearly know about it, and so, but cool little tidbit, cool little piece of information right there. So let's look at backtest 18 because it really wouldn't have done much until can I find it over here? That'd be kind of cool. I'm just not. I'm looking at the wrong number. 18, right there. 60% you would have gotten with a 1 to 7, but you would have had this kind of drawdown right here, right? Or this kind of doing nothing when backtest, I don't know, 22 is up 30% already. 1 to 3, and then backtest 22. Is it up here? I can't really find it. Whatever. But yeah, let's pick the best one. Backtest number 30. 1 to 7, probably 1.5, something like that, you know what I mean? And then 27, 1 to 4, random one in the middle, 18. Oh, we already looked at 18, 1 to 1, either 1 or 1.5 to 7. Okay? Isn't that so cool how a 0.5% can make such a difference when you're dealing with the computer? That's why discretion, along with these tools, is necessary. To know when to leave something on, to know when to stop out a little earlier. Those 0.5%, they add up. So now looking at an hourly, test number 35 would have done the worst. So let's scroll into that, 1 to 1. And number 7 would have done the best. 3 to 5 with a range of about 40%. I'm going to try to go a little quicker so that we can get through a bit more because I've already been recording for 18 minutes. So 1 to 1, and then number 21, probably 1.5 to 1, one of those, in that range. So, yeah, so now we're at, okay, I'm almost done. So yeah, now EXK. So we have the big indexes that people like to trade the most. Just a stock that did nothing but go up to, well, a stock that had a crazy 2021 and then really sold off. You could say that about Palantir too, and then a new stock. But I wanted to do something like an EXK and an FCX to show you guys how crazy the ranges could really be in terms of gain and loss, not necessarily just straight up ranges of positive returns. Because when we look at this EXK chart, wild, right? Wild. You have one that is underwater 27%, and one that has a gain, one that doubled, right? Which is crazy to think about because the one that doubled, let's take a look at its risk. Whoops, what backtest was that? 25. Scroll down there to it, 1 to 6, and then the one that did not do very well at all, 35, 1 to 2. Right, and then one just in the middle that did nothing. Let's try to find one that just really stayed around 10, number 28, 1 to 3. Isn't that so interesting how that risk could change it right there? So now let's go down to an hourly. Number 13 would have had a big drawdown. Let's look at that. If I can find it, where is it, guys? Can you see it? Right here. 2 to 5. Oh, I got rid of it by accident. There we go. And then is that 13? No, it's 9. Okay, let's look at that one though, because it's one in the middle. Backtest number 9. 3 to 3. I don't know why they keep on going away. I swear I'm not trying to do that on purpose. And then let's look at the best one. Number 5 is 3 to 1. Right, so really interesting how to trade these directional markets with a commodity that is a directional market could actually have a real effect on it. So let's take a look at 29 was the worst one. Probably a half or a quarter to 1, and then or 1. You know what I mean? The stop loss was 1. The take profit was about a quarter or a half, and then backtest 14, doing the best at 1 to 1. So now let's take a look at FCX. EXK is a gold stock. Backwards. EXK is a silver stock. FCX is a gold stock. Both had crazy run-ups recently, which you could see in that hourly that it would have traded it well. Then why not? Let's go from the bottom up on FCX. So we have number 33 that would have not done so hot. Either a half or a quarter to 1, and then we have 17 that would have done better. It's either 1 to a half or a quarter. So now let's head up to an hour. You can see that that range could just be so crazy. 32, 1 to 4, and then 29, 1 to 1. So now let's hop up here now. Take a look at number 4. And so now 3 to 3, and then we're just going to look at the best one. 24. We'll look at 1 to 7. Right, and so now let's chat a little bit. Let's talk about some interesting things. As I'll show you guys Beto too, just because Bitcoin's been going crazy. The whole point of me doing it like this is so that there's a transparency, there's a relationship built here, right? I'm not trying to tell you that my indicator is the best thing in the world and you're gonna become a millionaire from it and you're gonna win all your trades. No, I'm not saying that at all. What I'm saying is, if you do decide to purchase it, these are the ranges that you could see. This is the kind of stuff that you can get from it, right? This is how bad the bad could be. This is how good the good could be if you trade with your own discretion with different kinds of risks. The best trading systems, this is Beto, this is crazy. The best trading systems that I have found in my own experience when I do things with other people are the tools. They're not the fully automated things that'll just, you don't have to do anything for them, they'll run forever. Right? I haven't found those to be the best. I found the tools that you make to use in conjunction with your own thought process, your own decision making, to be the better choices. I found that because this is purely statistical. There's definitely trades in there that got blown out because of earnings, when humans would have just simply known to sell before it. I don't want to deal with earnings volatility. I want to keep this a game of just pure statistics, so I'm going to sell earlier. Computer wouldn't do that, right? That's what I'm trying to display to you guys right here. That's what I'm trying to tell you guys, so that way you can make an informed decision. I wouldn't want anybody to just buy my tool and use it like a computer. Like, you're not. You're you. You know what I mean? Use your discretion. Learn with it. Give yourself every excuse to make money trading. Why not, right? So use whatever kind of tool you would like, but know that it is a tool. Know that you should be making your own decisions. Use it in confluence with your own decisions. You could kind of use that as a confirmation tool, right? You don't have to buy every trade on the literal alert. There have been times where, what's a good example I could show one that works, right? But there have been times where because I'm on a 5 minute, right? Right, red alert right here, and then we have a drop. Then we have a bigger green candle. Take this short, right? Take this short down to here instead of taking this one down to wherever and holding it the whole way. Maybe you simply look at the chart right at 130. So then you take this short, write it down. There's so many different ways to do it. Don't put yourself in a box. Don't think that there's one way to do it. And so what we just went over here was ranges. How good could the good be when you do it different ways? How bad could the bad be when you do it different ways? I hope that this was good information for you guys. I hope that you appreciate everything. I hope that you got a lot of questions answered. I almost said that backwards. Hope you guys got a lot of questions answered. Hope that you guys check out the other video. Hope that you guys check out the website, read up a little bit on it. Um, yeah, I also read the poll that I did the other day about how you guys want a longer Python video. I'm gonna make that. Uh, but I wanted to get this out first because that person put up a good point, and I think that you guys deserve this information. So now you have it. Now you can make a more informed decision if you wanted to be a customer of Scoreson Enterprises. But yeah, if that's something that interests you, check it out in the description. If not, I'd appreciate a like and subscribe. Still just a growing channel, and I'm gonna get you guys a Python video about an asynchronous order book with Quart, not with Flask. So if you guys want to learn about that, if you subscribe, you'll be able to see that as soon as it comes out. That was a clap. It sounded funny though. Um, yeah, though. I hope you guys have a great time. That's about it. I'll see you guys in the next one. Have a good one.